Hi everyone, it's April 20, 2021, and let's discuss the global market update. It's Awesome10X for you. All right, so let's begin. So I'll just read a few things right now. You're seeing that Asian shares actually rose this Tuesday, led by a strong Chinese opening, shaking off the initial drag from the tech-driven Wall Street losses. However, the dollar stayed at multi-week lows against other major currencies. Asia Pacific shares rose outside of Japan, gaining 0.2%. So a lot of your Chinese blue chips also rose 0.13%. Meituan shares rose 1.59% after it raised 9.98 billion Hong Kong through an equity and convertible bond sale. Elsewhere in the US, actually Wall Street drew back from the record highs with a big drag from Tesla. The car maker said that Tesla was operating without anyone in the driver's seat, crashed into a tree on Saturday north of Houston, killing two occupants. This morning in Asia looks like a continuation of what we saw last night, where technology stocks were getting hit in the USA. The tech-heavy Nasdaq was the biggest mover, falling 1%. Dow Jones declining 0.36%. In our view, the dollar can remain heavy this week. The focus are shifting from U.S. economic outperformance to the improving global economic outlook more broadly. Okay, so let's take a look at what's happening in the Chinese markets, and let's take a look at the entire market in the U.S. per sector basis. So we argue that silver as a metal mining sector is actually very strong. Let's take a look. This is silver doing well. Your copper is actually doing well. So from a mining perspective, I'd say that the people who have some of the mines related in their portfolio are still doing well, relatively speaking. But so that sector is still strong. You're noticing that BYD companies still actually higher lows. This was the low in March around the 168, and then this was also double bottom here about 166 area. So the people who are buying around 166, seeing that this was a support in the last couple of months during December, still are steady. But take note that it's normal for people seeing how the Wall Street sell-off was happening, that this could actually be trading in a range. So your BYD company might actually be traded in a range from 166 to 200, which is a 20% range. Take note what's happening in other EVs. All right, let's take a look at each of them. Given there's the Shanghai Auto, some people are bullish on Geely Auto, but I'd argue that this one could actually be a trading range. So in this short term, although we bought some prices here about 19 plus, I'd say that some people are willing to exit at about 23.30 today, even as it goes to 24. And then you're going to see another sell off here again at about 26 to 28. So in the short term, anything can happen, but I'd say that people are willing to take some profits off the side. 1211 looks like that. 175 looks like that. Let's take a look at Wuling Motors. 305 managed to hit 230 and then going down today at about 211. So you're seeing a lot of people taking some profits today. Last night, they probably took some profits, and then today, as this goes to a flat, even as it rises back to about 2.8, there will be a lot of selling pressure there. So I'd say that the market is not out of the woods. A lot of your Chinese companies are actually trading with very little trading range. Let's understand a few things of what happened in the oversold region. When NYECA fell down 50%, we noticed that $56 was actually being bought, and so we made the buy arrow there. Some of us entered 56 to 57, some even at $55 here. Now, today it's rallied to about 65, 66. I'd say that the people are actually trimming and selling these towards cash. Now, you might wonder, why are we selling too early? Isn't it going to go 79? Say that it could, but given how the US market is selling off too deeply, these rallies right now are getting sold down. You could see that this rally was sold, this rally was sold. It's possible that this rally might be short-lived and then also get sold down. Although this rally could extend all the way to 79, what you would see in the market is that another seller here at these arrows. So higher movements are now being sold up, scaled out. Let's take a look at more names happening. What's happening in your solar power? So in Hong Kong, actually, your solar power still managed to go up. Example, your Sinyu Solar is still above this $12.50 and could rally to about 15. Nonetheless, given how the situation is right now, it's trading in a range. It's possible that this one will also trade in a range. So we are seeing muted bullishness in the market. It's all trading within a range. So what's going to happen with your Tencent and Alibaba? Let's take a look even on your JD as well. So your JD is this one. We argue that $300 looks to be a support, but notice that it hasn't been moving there. So if the market sell off still, the markets abroad are actually weaker. People are actually still cautious and not yet too aggressive because it can go as low as 280, for instance, another 10% drop if you're not careful. So some people are still gonna wait where the market will bottom. This is what JD looks like in Hong Kong. Let's take a look at what Alibaba looks like. This is what's happening in your Alibaba. For instance, if you bought 220 and even added a 230, right now it's 227. You're almost just break even. So there are some people who are wondering how range bound the markets really are. So given how range bound the markets are, you'll notice that people would place a sell order hit about 250 and another sell order at 270. As it goes up, there will be some sellers on the way up, perhaps even 240, there will be sellers, and then the buyers will only reside here about 220. So given how tough the markets are range bound right now, not everyone is willing to actually buy up. This is what's happening with your Alibaba. I'll show you what's happening with your Tencent. Your Tencent in Hong Kong looks like this. So it's just steady. It hasn't fallen below 600 yet, but it seems as if it doesn't also have a leeway to break above 677. So the short-term effect should be that Tencent is still consolidating within this range. Sorry. If it falls, it probably has a lot of buyers here at about 575. If it rallies, though, you have a lot of sellers within this area as well. So 677 or 650 area seems to have a lot of selling pressure. Let's take a look at gaming. 1337 or your Razer continues to trade at about 270 above. So it managed to break above 270, your prior resistance, but I'd say that some people are still going to take advantage of this as a selling area. So they're selling at 2.9, 2.8, and and my views, they're probably likely to buy back at 2.4. So because of the market situation, actually more range bound, it's unlikely that it's normal for people to be more cautious and actually be selling and taking some profits, even if they like this company all throughout. So I'd say that with these arrows, these are sell arrows, any rallies are still being sold out in the market. 1337 looks like that. I'll tell you what's looking in Xiaomi. Xiaomi is also looking to be another resistance area. Although it's up right now at 2685, take note that these resistances at about 27 to 28 could still be residing there. So it's possible that we don't necessarily have a huge rally. It's still in a range-bound moment. This is your March lows at about $22. Although this one is 27, look to see whether profit taking can ensue at about $28.60. That's what's happening with some of your Chinese issues that we're looking at. Your Ganfeng lithium, which is one of the strongest ones, are actually likely to be staying in a range. So I think that this movement is actually not possible right now, given how little the ranges are. So very little range so far, even after a 45% sell off from the peak. Some names are actually 50 to 70% down from its peak. Let's take a look one by one on them. So Asian shares are range bound, actually stronger than what's happening in the US. Let's take a look at each sector. So last night, actually, since the US market, actually the crypto related names are very weak. Of course, you know that BTC, we argued, might have been taking profits after after that significant sell off in the last couple of days. And so that is likely to translate to more selling pressure. If BTC rallies to about 60,000, you have a lot of selling pressure there. So although it can actually languish or stay sideways, it can also fall immediately back to about 46,000. That's part of the scenario thinking. So it can go up to 60,000, but it can also go down to as low as 50,000 or even 47,000. If you're looking to buy into this, you want to wait it out and see how low the market's getting. Or is it about 30% or 40%? So as of now, we can just see and infer that BTC is getting a lot of selling pressure. And in that case, you are seeing as well Ethereum going down. So although it bounced right now at 2.2, it's actually likely to also fall down again. With those things happening, let's see what's happening. People are still discussing Doge, right? So Doge is very expensive in the sense, even from a technical perspective. So it's already gone parabolic, although it can go 50 cents or 90 cents whatsoever. If you have a low cost, say 3-5 cents below, I'd say that taking profits is the right way to go, even if it goes higher. So you never really want to actually be selling on the peak. You should just sell when it's really aggressively frothy. Okay, What else can you say? There's been a lot of movement in crypto, such that what's happened is your bit farms and hot mining actually collapsed. No, this is what it looks like in your hot mining. Your hot mining, which owns a lot of BTCs, is actually going from as low as about here a dollar area to as high as 15 $16, correcting it all the way to about 60% down. Like last night, this fell to as low as $6 area, only to close to 677. Given this sell-off, I'd say that what happened last night was really more of a capitulation rather than an exact bottom. Now, of course, when you're capitulating, it can even fall further back to about $5. So assuming you have an entry somewhere here about $7 or $8 for hot mining, what you want to do here is actually to sell on rallies, given this big sell-off from $9 as low as $6 in just a week or so. You'll see a lot of people perhaps waiting to buy here about $5. In case you're wondering where would hot mining go, it could realistically go to $5. How low would $5 become? That would be, now, if you're wondering why is it $5, that used to be this extra support area in the past around January. So the reason like you would only buy hot mining is because you believe that BTC at about $45,000 is something that you would buy in essence, because the cost of actually mining it is just about $7,500 for the likes of hot mining. So a big drop here, if you're really if you're looking to take advantage of their current drops, is to buy this hot mining here at about $4 to $5 area, assuming it happens there. Now for CSTR, let's take a look at that. Crypto Star Corporation rallied as high as 40 cents. You saw this sell and rally movement. And then this is typically what's happening. It rallies, gets sold down, rallies, get sold down, rallies, get sold down. Given that it's already hitting here at about 25 cents, if you want to sell it out, you want to actually wait at about 37 cents before you sell. Let's say Bitfarms, let's take a look at this. This is also a blockchain related company. As you'll notice, it's normal to see a 50% drop from its peak. $9 all the way to $4.50. It's not surprising given it has moved from as low as $1 or even here in the sense that it's gone up from 30 cents here, 25 cents as high as $10. Now what you would just want to do here after a 40x move is to assume how low can this go. All stocks that go up 40x has that tendency to drop, of course. And how far will this fall? Let's try to estimate if it falls as low as 75% from its peak. Assuming it does fall 75% from its peak, Bitfarms will have a lot of buyers here about $2. Will you buy it at $2? The answer is yes. Now, even if you don't know the bottom, here about $4, it's not yet time to buy. Assuming you got in at $6, what you want to do is actually put a sell here about $6 if it ever rallies, and then buy it back here about $4 to $3. Right now, you still don't know the bottom, so you might wait your buying pressure here about $2 and then adjusting it to $3 if it will never really fall down there. Now, let's assume that you've got in to as high as about $6 here. What do you do? So assuming that you have a high price of $6, you want to actually do two things. Either wait for it to rally and sell there, or wait for it to fall and collapse all the way to $2. At some point in time, if it's so oversold, usually I'd say 75% drop is already an oversold region, similar to these lows. Once you see a bullish candle there, you actually want to average. So 6 plus 2 will give you a cost of 4. And then you have an easier time to actually manage your risk in the next 6 months for these names. I'd say that crypto-related names, I'd only get some Bitfarm, some hot mining. Why? Because I think that fundamentally, they're actually cheap versus their costs. Even if Bitfarms actually has a higher cost of about $10,000 to $15,000, your actual BTC is triple the price of current levels, triple to quadruple. It's still at $50,000. So it's highly correlated, yes, but I'd use the drops to actually be more of an opportunity rather than just really completely negate that thesis or that sector. Okay, there's a huge drop, of course, on Humble Pay. Let's talk about that. Humble Pay has the most leeway to fall for a capitulation, perhaps because there are so many people who have it. So it's already dropped from about $8 all the way to right now. The drop has been as low as 75% to 80%. So I was thinking, okay, so let's see how low can this go. I was taking a look at the prior supports here, and that could be the current support here, about 150 to 160. Of course, people would argue that, hey, could it fall to about 60 cents? Whatever your cost is, let's assume that you're typically here at about $3 above or $3.20, whatever your cost here is. Even with that significant drop of about 50%, do not worry. Wait for that drop to actually materialize, whether it goes about $1 or 70 cents or 50 cents. See where it actually consolidates, similar to something like this, and then you can actually see that you could sell this on any rallies. Your typical resistance right now for Humble Pay. I'm just talking right now on charts, all right. I know that there's a lot of other fundamental reason why it's being owned by a lot of people. The fact that it went from about 5 cents all the way to $8 tells you that something good was happening here. Either so this 80% sell off might it's real. Even if it's kind of risky for others, actually some people would buy this huge drop because it's similar to their fascination of buying it here at about $1 before. So I wouldn't actually argue that there will be buyers on Humble Pay as low as $1 if it ever falls down. The lower it goes, you'll see oversold bounces happening. What would be the indicator for an oversold bounce? Let's take a look at your RSI here. Your Humble Pay fell 30% last night over no news. So it's likely that there are people who would actually consider putting this in their watch list for an oversold bounce. The biggest news, of course, would just be the slew of crypto going down and potentially affecting Humble Pay from its user base. Nonetheless, so you could see that it's already oversold. It doesn't mean that it's already ripe for a bounce, but that tells you that that's also not a leeway or a recipe to sell at any price. So whether it rallies about $2.50 or $3, you want to actually be exiting on rallies, whether it be 30% or 25% up. So will it ever rally back to $3? Quite impossible, maybe. So if you have it, you have to just adjust your expectations. Let's take a look where the resistances would lie. Is it going to be about 50%? Here about 250. So I think in the short term, it's normal to see that the people who got caught here would actually be posting a sell or a sell area, perhaps here about 2.5 to trim down their losses. Or they'll probably just wait it out. It's also possible some people would wait it out depending on how high their allocations are. But this was a huge drop last night. Humble Pay falling about more than 36% in a single day. Okay, so let's take a look further on other issues. Okay, so your big caps were also falling down last night. You've got even your Charizards, whether it be Shopify, Twilio, Roku, Atlassian, Datadog, all falling down. Your Nintendo falling down. So I'd say that some people are taking all of their profits out, and if they have any profits still. So you'll notice, although that's a big drop from a single day, performance of these groups are actually still up significantly year to date. So year to date, your strongest ones are actually Freeport-McMoRan, your Interactive Brokers, your Charles Schwab, Sony, Roku, and all those names. So some people would trim it and then put it into some cash. Reason being, you've got a slew of sectors getting killed and a lot of resistances forming in the markets. Take note on software names. Let's take a look one by one. Sector-wise, people are selling all of their big winners. Cerence, Fastly, these have been the poster children of for Cerence, for Voice First, Fastly, for one of the leaders in edge compute. The big drops last night on both of them is telling me that a lot of people are still trimming all of their massive gains. So momentum plays are still being sold down. Take note what's happened. Performance-wise, these companies are still significantly the highest gains. Cerence, Fastly, Scalar, Zoom Video, DocuSign, these are all up triple digits. So with those triple digit gains, the drops recently are actually mostly digestion of the profits that people could still take. So in that case, what will you do for those people who still have Fastly and Cerence? What you want to understand is that the market is not willing to actually pay a huge premium. Notice that when Fastly bottomed out here at $60, at $75, it already was getting crushed. This is your Fastly. Tells you that at $75, it's a very small range right now for your Fastly. It's just a 20% range. That's what's happening with Fastly. If $75 prior support is becoming your 75 resistance, you want to just be aware that, okay, put it in your notebook. Fastly, no matter how much I like it, always has a resistance, $75. That's all that you know. It could it go $65 again, or $60, or even $55? I'd say because of the lack of people willing to buy Fastly at 75, you set up yourself for a possible new low. Either it breaks to 61 or even goes to 55. So you just have to be open to that. Now, would you be afraid of newer lows in case it does happen? it's not really something that you are willing to be forecasting upon. What you should simply be doing is always to be prepared. So we always say that prepare for the arc, not necessarily predict the rain. What does that mean? Whatever happens with Fastly, whether it goes down to $60 or $50, what you want to simply do is very clearly, if you're positioned at $67 or $70, you're unsure what to do, you want to trim and exit as little as possible, even at 71, 72, because the market situation, you want the market to be calm and stable first before you can really nibble. So assuming that you were nibbling here at about $70 below, which is normal given that it's already oversold, it's possible that it can still fall here about 55. So you need to have a leeway that you trim half just in case it also falls there. So you just need to be more cautious than normal. Okay, let's take a look at the rest. Serens is still expensive, so it's possible that these can drop further. You see people buying at 80 and then right now at 100, also at also another 20% up. People are already selling. So it's not likely that Serens will stay above 100 anytime soon. Any rallies of Serens would likely be sold. I wouldn't say no if you sold your Serens last night at $94 if you had it, because this sell-off might actually become deeper. If 140 here was the peak, it's likely that it can still fall to $70. So it's just preparation or ability to wait if it goes 50%. So a lot of companies actually right now are falling down, which means that people are also willing to sell even their winners like CrowdStrike. Notice that CrowdStrike here about $220 is getting some selling pressure. Why would they sell it? It's because the market conditions are the reason why people are selling even their winners. So what you saw here, which is when people were consolidating and selling some of their winners, I think that's what's happening with CrowdStrike here. Also, what's happening with your Tesla. Like last night, Tesla was also having a hard time. I'd say that 710 to 760, some people are also actually taking profits on their Tesla here, with the assumption that they'll probably buy back here about 600 to 650. A small trading range is probably going to consolidate for Tesla. If Tesla were to consolidate, what's going to happen to the other leaders? Likely that NIO also has a resistance. So you're seeing that right now, NIO is consolidating. It hasn't gone 45, so you might see in the short term $40, very little range, I know. 35 to 41 to 42, or about 18% seems to be the small range for this company for NIO. XPeng also, take note that it's just stuck in a range. So any rallies back to about 37 to 39 are all going to be sold by the market and then bought about 31 or 25. So really a lot of range trading action seen in the markets overall. E-commerce, let's take a look at that. E-commerce, you've got big winners like, so I didn't put like e-commerce here. Actually, e-commerce like Meli, Mercado Libre and all that stuff, it's still also trading in a range, even your Shopify. So I don't see like the market significantly going beyond their ranges. And in light of that, because it's stuck in a range, you don't make a lot of money by sitting and parking it there. What you make money from is to actually just consider a trading range on all of these. If it's already down a lot, you don't need to sell it, given that example, for Shopify, there always are opportunities to sell at about 1.2 and 1.3. So it's not really as if it's a problem if you never got to sell high. Spotify, C Limited, I noticed that the weakness in the market suggests that you want to actually be selling even on strength. So although C Limited is very strong, can rally to about 290 or 280, I think that there are enough people selling at 250 last night. 250 to 260 seems to be a selling area pressure for others. What's going to happen with the likes of NVIDIA, for instance? Despite the strength of NVIDIA breaking 585, I would say that there are also people who are so scared of the market. NVIDIA and ARM's deal are actually gonna try to be they're saying that it's going to be the acquisition, which is forcing some people to take some profits here. If they're taking profits here, you want to actually be using a substantial drop on NVIDIA. Let's say it goes 550 or 530 to actually be buying there. What's happening to a lot of your electric vehicles? So ChargePoint example is a beneficiary of your electric vehicles in the sense that it has ChargePoint. What you're noticing is very simply it's trading in a range. So take note that the ranges here, you've got about 15 all the way to $20 or 30% range. You want to be trimming on the rallies of 2021, but also buying and significantly just holding your position, even at 15 can go to 12 or 13. Let's talk about the weakness names. All right, the weakness names have been your penny stocks, similar. So all of your additive manufacturing and all of your wearables are considered penny stocks in the sense that it's not true that all penny stocks are bad. It's just that because of its market cap being very low, the market actually sees it more like a highly volatile name. So with high volatility, how low can Nano Dimension go? We've seen already companies falling and breaking below their 50% area, and this happens to be one of them. From its peak of about 17, this has already fallen about 65% here at about $6 area. What you want to see is that $6 area continue to stay strong such that if it rallies back to about 9, 10, 11, that's when you'll sell. So these are companies that in my view are trading in a bigger range, not necessarily at a 50% range, but as high as an 80% range. So you want to be actually not that bearish about these companies, even as it has been punishing so much, because you don't really see a lot of that bad news in the next 6 months still materializing. Let's take a look at whether there's an actual bad news on the entire additive manufacturing. We're actually bullish on this 3D printing because of how much desktop metal today can do. And you take a look at most of the people and even their clientele, it's really more on the positive side. So virtually anyone's using additive manufacturing in their portfolio. Let's take a look at whether desktop metal itself has more clients today. Let's take a look at their Twitter page just to see if they're sharing more ideas. EM desktop metal. Stocks with a $2 billion market cap with the largest drop from their 52-week highs. So you're noticing in the sense, what are the names that have fallen a lot? AI, yes, it has fallen a lot. Desktop metal has fallen a lot. Among these names, these two seem to be okay for me, and CCIV, Lucid Motors, falling a lot. So apart from all of them, it's actually there are some of these stocks that are going down. Cruel Teacher, yes. Okay, let's take a look. So what's happening with CCIV? How low can this go? It's already dropped from about $70, $65 all the way to about $20. I'd argue that this was an easy sell, and this would have been an easy sell at 35. But I'd say that right now you're waiting for the market to drop, and you're just really waiting for this rally to ensue for you to sell. Notice that your rallies are 50% further for companies like this. So don't worry if it rallies to, let's say 16 rallies to 24. So short term, it's probably going to be something like that. Your first resistance on your CCIV would still stay here at about 23 to 24. So just understand that the ranges right now are quite big for these SPACs and very volatile names. Yesterday, actually, among the SPACs, this was the only name that I had that went up, which was AGC. It's good to see that it was actually been able to get bought at about $12.50, but it doesn't mean that it's gonna be up and away. Likely that AGC is gonna have resistances here about $15, and if you want to be careful, you want to have your cost as low as possible from about 12 to 11. And so if you have a chance to get out at about 14 or 15, you might actually want to trim some of your positions to actually alleviate your cost and get a lower cost. Let's see. Roku has been falling. I'd argue that Roku is also getting some sellers after it fails to break above 400. So after a significant rally here of about 35%, notice after dropping from 290 to as high as 390, that $100 move, the market already took profit again. So you're seeing that it's been consistently just a trading range. So this was your prior highs, 475, 430, 390. So next time it's probably going to be 360. You still continue to sell. So you buy it back where? 250 or 290. So you're more on the sell-off pressure rather than on the buying pressure. A lot of stocks will continue to be very weak in my view. Let's take a look at more sectors here. Tattoo Chef dropping 11%. Okay. Velodyne LiDAR, $14. Let's see. I'd say that on the LiDAR firms itself, there's really a huge differences. VLDR about 15, 16 would still have a lot of selling pressure here. Despite the fact that it has rallied to 12, I'd say that you have to be more cautious in selling there. So a lot of significant drops. We are trading in a huge range. 40 to 50% usually for SPACs, but people would still take profit at 10 to 20%. How so? Sample Ouster here about $8, although you can see that can rally to $10. Take note that's 25%. Just be aware of what to do on any rallies. Right now, the market's been willing to sell near 10 or 11 for your Ouster here. Lots of selling pressure. In Noviz, also a lot of selling pressure. Take note, buyers are about $9, 9.20, and then a lot of selling pressure here about 10, 11, 12. What am I doing in my own portfolio? What I did was essentially try to take as many of my profits on the side. I put it all first into cash, all my profits, gains, and small losses. I put it first on cash so that my exposure is small. Assuming my exposure, like example, if $18,000, let's say it falls 10%, I think that my losses will just have another $1,000 to $2,000. So what do I do? Usually, I think that the best way to alleviate yourself from further risks is to just simply have a recognition of the weakness. Example, these are all weak. EHang, Global Star, Bingo, ASXC. What will I do? I'd likely just sell them on a rally, not any price, but I'd sell them on rallies. So it's sad that EHang continues to fall, can go to $21. Any rise to $30 would be sold by me. GSAT, what will I do here? Any rallies on GSAT back to about $1.20, where I thought that there was a support here, I'd probably selling from support to resistance. So that's what I'll do. GSAT, EHang, ASXC. Take a look at this one. Felt that about $2 seems to be support, but it continued to fall further. It's now 174. Where's the resistance here? It's going to be somewhere here at $3. So I'll sell it actually. It's just that I'm waiting for the bounces to sell into. So that's what I've been doing. I've been just selling a lot of my positions into some cash so that I have leeway to have an idea on how low the market can go, given how difficult it is to assume where is the bottom of the market. So all of my profits I've taken when I could, 7%, 10%, 16%. That's why from a portfolio basis, I'm actually still up. But I think for the year, what's happening in the market is that the ranges are quite little. So you'll notice that I started January, it's now April, it's about 3 months. I'm up 17% on my eToro, but there's like a 10% drawdown here, roughly speaking. So about 7 to 10% for the month, for the entire quarter. It's not that good. So I think that given how weak the markets are, I would be more cautious and be trimming when I can. So I've been trimming. It's sad because I didn't sell at a high. This used to trade as high as about 29,000 something. But I allowed some losses to ensue. So yun. Very weak for the US market. Okay, let me read. Although we aren't nuking our stocks, wouldn't it be prudent to keep all of them for a long term? The market was red this morning. I wasn't sure whether to sell or add more of the stocks that I believe have potential in the future, such as ABML and Humble. I wonder if today was the second dip. I think that the market, I would be willing to buy. It's just that we have to have scenario planning. So the scenario planning is what happens if Humble Pay goes $1. So buying at $1.60 would mean that you're buying 60% higher. So I think at 160, since it's not sure whether Humble Pay goes $1 or even at $3, I'd rather just wait for the market to tell me where Humble Pay will go. Similar to ABML, I like the company, I like the potential, I like the CEOs and everything. But what I'll do in OTC names like Humble Pay or ABML is to see that while it's weak, any rallies would have a lot of resistances. It means that I'll be able to sell it high and then I'll be able to buy it back low. If I'm never able to sell high, what would happen is I'll just let it rot. Let's say ABML goes down 30, 50% lower, Humble Pay goes 30 to 50% lower. At some point, because you're right, it's already down 80% from its peak. It's likely to actually get an oversold bounce. Let's see. What do you think about what's going to happen to Humble, Skills, Palantir, respectively? I believe in them, but what's happening in the market? So I believe in Humble Pay. Skills is actually a high cash flow company. With Skills, though, I don't have because I have Unity. I actually have a large stake on Unity, which is, well, it's not down. I'm happy that it's not down, but it's not as if it's going up. So what I've been doing with my gaming entities is notice that I've been buying and selling this. When I got here, I bought a lot at about 90. I sold a lot at about 105. I got back in at $90, and then I got back in at 98. I'm still waiting for a sell at about 110 and 112 before I unload. I think that it's very difficult to ascertain where the markets will go, which makes people actually do a lot of things. But I'm not really doing a lot of things. I'm not nuking my port. But what I've done is I sold some of my big gainers because what I failed to do was to take my profits in Palantir before the demo day. So I thought that 25, 26 on Palantir was still a hold, but I let it be, and then it fell back to about 21 to 22. So I think like you're managing simply the drawdown. What I'm doing is I'm I'm simply managing my drawdown based on my exposure to the market, assuming that let's assume that I have $100,000 exposed long in the market. I'll probably trim it to about $75,000 long. The $25,000 is in cash. Doesn't mean that the $75,000 I remain exposed wouldn't go down, but it can also go up given how oversold the markets are. Skills is a great company, but all SPACs are starting from 10. So I would argue that the people selling skills at about 14, 15, 16 are the people who got it at 10 below. So I'd say that desktop metal, that's one of the reasons why DM continues to fall below 15. So it's now trading at $12, right? Assuming you got in at 15 because you saw this bottom here at 14, rally to 21, and you thought that 14 area and 15 was a support, only to fall down back to 1180. I say that it's a company that still is the sector leader. You didn't buy so high. It's not as if you bought at 20 or 30. So you might as well actually be waiting here at 15, or even as it went to 12. You wait whether it consolidates. You can sell at about 14, 15 again, like back to your cost, or simply just wait it out. So I'm not willing to sell actually most of my positions. If I'm down 20% on it, I've just been keeping it, especially since I bought it in the thinking that anyway, this is a company that has a 100 to 1,000% reward potential. I'm talking about 100 to 1,000% potential. That's why I'm willing to actually buy it and keep it, no matter if the market can go against me. It's fine. I know that it's a little bit painful to actually see your profits getting taken away, but it's really just what it is. Nothing good's happening for Nano Dimension and BNGO. Those two are weak. What I do when I have a weak name is I just wait for the market to actually consolidate on it. Can go weaker. It's going to be primary for people to be choosing to actually keep on waiting for it to bottom out. Nano Dimension seems to be a rally range from $6 to $12. Let's see whether we can exit about 8, 9, 10, 11. BNGO, quite a big range. BNGO is range bound at about 5 to 9 in my view. So showing to you the charts on this name. So this is your prior resistance at $9. You're seeing a lower low. This was 7, and right now it's 5. That's similar to your January airs of $5 here. So I'd assume that there is a battleground from about 5 to 9. The problem is if it breaks 5, can even go to 4 or 2. So that's possible. But what I'll do here is it's very clear that it's continuously still selling off. There's no point of return. Any rallies would be sold on BNGO. So you're probably waiting it out. So I don't think that my BNGO, which is here, is gonna get out at a price that is positive. Let me show to you. I've got BNGO here. I'm down about 30%. I think that if I can exit at about 10 to 15% loss, I will. So what I'll do is I won't add. I'm actually just waiting for a rally to exit myself into. Same thing for ASXC. I won't be able to get out safely. Probably at 2.3 or 2.2 is all that I could exit it out. So there are some ventures that we do that doesn't materialize. Unity, I'm holding on, but I'll probably be selling 103 or 105. For positions such as BNGO, ASXC, EHANG, and GSAT, by selling them on rallies, do you mean until we break even? Or does it mean that the market doesn't like these names? Any bad funda, chance for bull run, or high gains? When I see that these stocks, I have all of them, BNGO, ASXC, EHANG, and GSAT. When I know that the market doesn't like them, it means that the market can take either a year or 2 years before I could even break even on them. So I could either sell it because I could probably take a profit on other names. I could, but I wouldn't be allowing myself to lose it now and sell it at any price. What does that mean? If I have about, this is what I usually do. So I have how much? 2,000, 3,000, about $4,300, and this is about $5,500. So these are my biggest losses, right? I've got $1,500 of loss in these 1, 2, 3, 4, 5 names. These are my biggest losers: NNDM, EHang, GSAT, BNGO, and ASXC. The best way for me to mitigate the losses in there is to actually just, so it's about approximately 30% loss. So I had a $5,000 position on them and I'm down 1.5, which tells me that if I sell all of them, I've got 3.5. What I'll do is I'll try to lessen my mistakes. If I am down 1.5, I'll try to be selling near, let's say, if I could minimize that 1.5 loss to say a $700 loss, I'll probably exiting it. What if that 1.5 continues to fall to about $2.5 loss? Then I'd be losing another $1,000. True, but I'd say that given it fell already quite significantly, the leeway for it to continue falling 40 to 50% lower after a drop of 30% from my cost is probably not as high probability. Meaning, example, if you were on the opposite side, let's say you sell GSAT at $1, you have to be so sure that you can get GSAT back to about 70 cents or 80 cents for it to make sense. Now, given that I'm not willing to gamble that I'm able to sell BNGO or ASXC or EHang or GSAT at a really good price, I'll just probably exit it at the highest price possible. Won't add, won't buy. I'm just gonna sell. And I'm willing to see that it suffers 50% loss. I'm down 30% right now, so it could fall 50%, but this is part of my diversification system. Now, you might wonder, if I have $5,000 there and I've lost if I lose $5, what prevents me that I lose it all? What if I lose the entire $5,000 in these 5 names? In fairness, I think that these 5 names won't go to zero. I don't think that it's a fraud. I chose these companies with a thinking that they do have great partners. I won't be able to dictate that it's going to go bull run on these 5 names. It's possible that a bull run happens that these 5 names will actually not participate in a bull run. That's also likely. That's why from a portfolio perspective, I would allocate a semblance of losers that I could choose 50 names and then 10% or 20% of them would really lose. I mean, even if I wait a year or 2 years, it's likely. That's part of my system, and I don't really I couldn't really control what the markets think. But when I have a loser, I'll probably just limit it simply by having exposure there. Like my exposure, if you want to go down 80-90%, anyway, it's $5,000. You lose 90% on that. Even if I lost 100% on that, I lose $5,000. I still have another 20,000 or 25,000 that I could actually make that. If my 25,000 earns 20%, whatever losses I make on that 20%, even if it's 100% down, I know that I could recover. It just tells me that if it's weak, it's kind of like love. You love that person, he doesn't love you back. You just admit to yourself that not all of your stocks will actually love you back. Hopefully, of course, these 5 names recover in time. But I don't think that I'm willing. Here's what I do kasi. I always do position sizing. So I already automatically assume that not all of my stocks would win. Because if I knew that that stock would win, I wouldn't even have placed. If I knew that that stock would win, I'd have put $25,000 there. Why would I just put $1,000 or $2,000 there? I thought that it's a winner, but I'm wrong. So the good thing is, so you could see that I still have cash. I will be able to fix it. So if this was, let's say I'm a human. It's not. Let's say I am a human being. So how I handle losses is simple. I allow the position size to move against me. I wait for the market to tell me, hey, is ASXC really not getting any help for whatever 6 months time frame? So if in the next 6 months I know that ASXC can only rally to $2 and the drop is always $1.50, I can actually trade within that range. So far, the only reason why I'm not moving on these 5 names is because I don't know their bottom and I don't know their peak. Because if I do anything right now, it's assuming that I know. When I don't, like I'm pretty sure that BNGO, if it goes to $3-4, I'll let it be. So it's I'm not willing to buy because I'm not sure if it's gonna rally tomorrow or next week or next month. So that's the reason why I'm not buying. But if I see that the market has bottom, um, you'll see me anyway move. But when I don't know where the market's gonna go, I don't move. And usually when I don't know where the markets are going, you'll notice how I handle the portfolio drawdown, limit my exposure in the markets to as little as possible if I can. So I sold a lot of winners. I'm willing to actually wait for the market to tell me the direction. Until then, no matter how much I read fundamentals, I cannot actually attack. It's wrong to attack buying a stock if you don't have the technicals by your side. Fundamentals can be good, but if the technicals aren't agreeing with you, let people who want to sell continue to sell. And when you are able to pick it up, that's when you buy. Whether it's 50% down from my cost, I will be fine to pick it up. Did I ever have a stock fall down 50% on me only to make a gain afterwards? Yes. A couple of years ago, about 2 years ago, I had a mistake with Funko and Farfetch. What I did was actually sell and then buy a lot. Actually, when it fell about 50 to 60% lower. So, assuming that this would happen for these five names, you'll see me how I handle my drawdowns. I'd be able to fix this mess, but I'll be doing a lot of range trading here. I'll be selling some rallies, I'll be buying it back, and so forth. It's a little bit really hard. Like 5,000, I'll be exiting $4,000, buying in. I'll make my money in out in those five losers. Five losers, so I let it be. Yun. Thank you very much. API is a winner, but I sold as well. I just think that no matter how good a company's fundamentals is right now, I put off all of my winners actually right now to cash. You'll notice that a lot of my winners went to cash. So a lot of them actually went to cash, and then I trimmed some of the losers as well. So I had a high cost on Agora at 58 before, and I trimmed it to 55, 54, just so that I don't lose more. But I made some money on Agora then. I got in at 47, I sold at 54. So parang tabla lang ako with Agora. I got a lot of Agora when it fell below 51. Hindi ako talo dyan. But yun nga, as when I see that I can make money in companies like Agora, Alibaba, C Limited, Roblox, that means that I'll be able to gain the losses in my portfolio. So I don't look at the stock per se. I actually look more on the portfolio per se. I could actually sell everything, $27,000, make 10%, it goes 30,000. That's fine. I'll make 20% that way. But I don't know. I think that the reason why I didn't sell all, some people like to nuke. The reason why I didn't sell all is because I don't see a reason why the companies that are already down, say 30%, would continue to fall another 10 to 20%. If you ask me to short those companies, because I'm sure that EHang would fall or ASXC would fall or all of those names, I'm not really sure. Just because Nano Dimension is already oversold right now doesn't make me think that it's going to fall further. So it doesn't matter if your cost is $8 for Nano Dimension, it's now trading at from 8, it's now $6. I think that the rationale why you bought in at about $8 was because you didn't know whether a bottom was ensuing on Nano Dimension, but the prior support of Nano Dimension before was about $6.60. You just didn't think that you could buy at the same price during the March 5 sell-off, which is normal because why would you always assume that the prices here will break down? So this was the price here, $7. And then if you didn't buy at $7 before, you didn't know that it's going to go $5 anyway. So was buying at $7 area really bad? I think that you were just looking at the prior support then. So what I'll do is I'll sell it at $7 if I can. But it's all in hindsight. So you don't really tell yourself that, you don't punish yourself actually. First and foremost, I am always risk managing my companies by position size. It's not really, I don't manage my risk on 25% down, mechanical sell off. No. I could have $100,000 position, but if it's like a $5 million or $3 million account, doesn't matter. It's gonna still be the same. So think about it on the portfolio perspective, rather than, oh, I'm down 30% on EHang, I'm down 30% on DNGO, etc., etc. So whatever your losses are, the only way that you can manage that risk is in position size. So that's all. Thank you. Bye-bye.